Is Devon Energy an excellent dividend stock to buy right now? I'm going to answer that question in this video, looking across 5 critical metrics, starting with dividends and earnings per share. So let's get right into it. So what I have here in purple is Devon Energy's normalized earnings per share going back 10 years, and I've also got its dividend per share going back that same amount of time. So what you see is wildly fluctuating earnings per share for the company up and down, and that follows the cyclical nature of the oil and gas, the energy industry, right? It's cyclical. When prices go up and prices go down depending on supply and demand, and so does the revenues and earnings per share of Devon Energy. Interestingly, the company has set its dividend policy at a variable level. So when its earnings per share perform well, its dividends go up. And when its earnings go down, when oil prices come down, as they have been for the last 2 quarters, it has been cutting its dividend per share. So this is not a company for investors that are looking for consistent and steady dividends over time because the company's dividend policy is variable. Still, it has shown nice dividend growth, and especially over the last couple of years, as energy prices are much, much higher than they were a year and a half ago, let's say, ever since the Russian invasion of Ukraine. And you have dividends per share at $5.17, earnings per share of $9.06 over the trailing 12 months. The next thing I wanted to look at is Devon Energy's revenue over the last 10 years. And I wanted to see if there was a trend or if this was just fluctuations. And I do notice that it's mostly fluctuations here. As you could see, revenue increased 2014 to 2015. Then it was moving downward as oil prices were muted. And then as oil prices exploded following the invasion of Ukraine, so did Devon Energy's revenue. So it's a cyclical business. It's going to increase and decrease based on energy prices. I also wanted to look at the company's operating profit margin over the trailing 12 months. I wanted to see if it has a cost structure that allows it to remain profitable even when revenues decrease, even when oil prices decrease. And the answer is no, that's not the case. When revenue was falling, its operating margin collapsed from close to 30% in 2015 down to negative 15% for several quarters in the trailing 12 months in 2016 and remained negative for much of the mid 2000s in 2016, 2017, 2019, 2020, 2021. And so it can experience very good profit margins like this 41% in recent quarters as revenue has increased, but it can also experience the negative side. The next thing I wanted to look at is its cash flow from operations to sales, because many of these energy companies have a significant degree of depreciation expenses, which is a non-cash expense, which allows them to generate cash flows even when the profits are negative. And that is certainly the case with Devon Energy. See, even though the profitability was negative for several years in the last decade, cash flow from operations to sales was always positive and robust, even over 50% a few times, and then the lowest it went was like 14%, and in the most recent update of 44.5%. So the company delivers robust cash flow from operations, which in my opinion could be for an oil company, could be for an energy company, I should say, could be more vital than profitability because of the significant depreciation expense. Finally, I wanted to look at valuation, and I chose to use the forward price to earnings ratio. And looking at this metric, the stock is not prohibitively expensive at a forward PE of 7.33. So To answer the question, is Devon Energy an excellent dividend stock to buy? I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. I will say yes with an asterisk, right? So I will say yes if you don't already have an energy stock in your portfolio. If you don't already have an energy stock in your portfolio. So if you already own something like an ExxonMobil or a Chevron, then I would not recommend adding a Devon Energy to the mix. But if you don't own any oil or energy stocks in your portfolio, then adding a Devon Energy could be a really good addition to your portfolio for two reasons. Number one, it's not that expensive, so you're getting a decent risk versus reward. And number two, it offers you a degree of inflation protection, specifically inflation in energy prices. So when energy prices go up, this stock will go up as well, right? Because its revenue and earnings will go up, and it's most likely that the share price will go up as well. And even if it doesn't, you're going to get a higher dividend because its revenue and earnings went up. So it gives you some protection in your portfolio from higher energy prices, right? So but if you already have a stock like ExxonMobil in your portfolio, that benefit is muted because you already have some degree of protection from that with ExxonMobil. So then the only benefit you're getting is the relatively inexpensive valuation. So to answer the question, should you buy, is Devon Energy an excellent dividend stock to buy? Yes, if you don't own any energy stocks in your portfolio, it's an excellent stock to add to your portfolio because it gives you that degree of protection. Plus, it's not trading prohibitively expensively. All right, so that's all I've got for this video. If you enjoyed this one, I'm going to link you to two other videos that I've made that I think you were really going to enjoy. So please go ahead and click on those, and I'll see you over there.